Hey everyone, let's dive into Vail's Q4 2024 earnings call.
Yeah, we've got a ton of data to unpack here.
For sure. But we're going to pull out the insights that really matter most to you guys, whether you're already following Vail or just starting to look into this mining giant.
Absolutely. So to start, Vail is a global powerhouse in mining, known for its iron ore and nickel production.
And this Q4 report, it was a big one.
It was big news. Record iron ore production projects ahead of schedule, cost-cutting measures, and a nice dividend payout for shareholders.
Yeah, and stick around to the end because we've got our This Is Not Financial Advice segment, where we'll throw out a wild trade idea based on all this.
Oh yeah, it's an idea that might make you think twice. But hey, that's what these deep dives are all about, right? Getting those creative juices flowing.
Exactly. But before we get too speculative, let's zoom out and look at the bigger picture. Vail's got this ambitious 2030 vision they keep talking about.
Right. It's all about shifting their portfolio to meet the needs of a decarbonizing world, while also staying competitive on costs.
Makes sense. Especially after some of the, well, let's say, challenges Vail's faced in the past.
Yeah, they're really trying to position themselves as a reliable partner for the future.
For sure. So it's interesting to see how they're weaving this theme of responsible mining into their strategy.
Absolutely. And it's not just talk. They're backing it up with action, like their safety record. They've brought their injury frequency rate down to 1.1%.
That's a big improvement.
It is. And remember, those damn disasters a few years back, those were huge blows.
Yeah, not just for Vail, but for the whole industry.
Exactly. So the fact that they're making progress on dam safety is a big deal. It shows they're serious about learning from the past.
Okay, so they're taking steps in the right direction, but how are they actually performing on the business side?
Well, 2024 was a pretty good year for Vail. They hit their production and cost targets, which shows they can deliver.
That's reassuring, especially for investors who might be a little hesitant after those past issues. But what were some of the specific achievements that stood out?
Well, for starters, they delivered two major iron ore projects, Vargem Grande and Capanema, ahead of schedule and on budget.
Wow, ahead of schedule and on budget. That's not easy to do.
Not at all, especially with projects of that size.
Yeah.
And those add 30 million tons of low-cost production capacity.
30 million tons. That's massive.
Yeah.
What else is happening with iron ore?
They also got their first ore from the Vibesumi nickel project, which is a big step towards more efficient nickel operations.
Yeah.
And they've been making some strategic partnerships, acquiring 15% of Minas Rio and building a concentration plant in Oman.
Okay, so they're laying the groundwork for the future.
Yeah.
But let's talk about the present. Iron ore is still their main game. How did they do there?
They crushed it. Record iron ore production, 328 million tons, highest since 2018.
That's a lot of iron ore. But volume isn't everything? What about the quality?
That's where it gets interesting. They've been very deliberate about reducing direct sales of lower quality iron ore and increasing their share of high quality products.
Smart move. So it's not just about digging up more. It's about digging up the right stuff, the kind that commands a higher price.
Exactly. Like the difference between selling regular coffee and specialty beans, you can charge a premium for the good stuff.
Love that analogy. Makes total sense. So they're focusing on quality. But what about costs?
Another area where Vail's doing well. They've managed to keep their costs under control across the board. They hit all their cost targets for the year.
Impressive. Especially in an industry where costs can easily get out of hand. How are they doing it?
It's a combination of things. They've been implementing efficiency measures, optimizing their processes, streamlining operations, and they've been very disciplined with their spending, focusing on projects with the highest returns.
So they're being strategic with every dollar.
Exactly. And that shows in their C1 cash costs for iron ore, particularly in Q4 2024. They hit 18.88 cents per ton, their lowest since 2022.
Okay, I'm starting to see why investors are paying attention. They're producing record amounts of high-quality iron ore, keeping costs low, and delivering on their promises. But they're not just an iron ore company, right? What about those other ventures?
You're right. They've also been making moves in base metals, particularly copper. Their copper production hit its highest point since 2020, mainly driven by their Salobo mine.
Interesting. So they're not putting all their eggs in one basket. They're diversifying.
Yeah, and they've got this review underway for their Thompson mine.
Ooh, what's that all about?
It's part of their strategy to optimize their assets and maximize value.
Could they be thinking about a sale?
Maybe. Or a strategic partnership? It's hard to say for sure, but it definitely adds some intrigue.
All right. So they're doing well in iron ore, making moves in base metals, and showing a commitment to responsible mining. Anything else they're doing that's worth mentioning?
Well, they've launched this program called New Carajás. It's all about developing the Carajás region.
Which is already known for its high-grade iron ore.
Right. But Vale thinks there's even more potential there, especially for other critical minerals.
Critical minerals. Now that's interesting, especially with the growing demand for those materials in things like electric vehicles and renewable energy.
Exactly. They're thinking ahead, trying to capitalize on those trends.
So they've got a dedicated team and more investment for this new Carajás program.
They do. It's a serious commitment to their long-term vision. They're being a little quiet about the details for now, but we should get more insights as things progress.
Makes sense. So they're not just sitting back. They're exploring new frontiers and investing in the future. This is shaping up to be a very interesting story for Vale. But before we get carried away with all this positive news, let's take a closer look at their financials.
Let's do it. Time to dive into the numbers.
Exactly. After all, numbers speak louder than words. We'll be back soon with part 2, where we break down Vale's financials. Stay tuned. All right, welcome back. Everyone ready to dig into some numbers, see what's happening behind the scenes at Vale?
Let's do it. We saw the headlines, record production, all those strategic moves. Now it's time to look at the financials, see if they back it all up.
Okay, so Vale reported pro forma EBITDA of just over $4.1 billion in Q4. That's a 9% jump from the previous quarter. Not bad at all. What drove that performance?
Well, remember how we talked about Vale's shift to higher quality iron ore? That's paying off big time. Their improved realized premiums added a solid $190 million to their EBITDA.
So quality over quantity. It's not just talk. It's actually showing up in their bottom line.
Exactly. And it's not just the premium products. Their cost-cutting efforts are making a difference, too. Their unit costs went down across all their commodities year over year.
That kind of efficiency really adds up. It's like finding extra profit hidden in their operations.
It is. But the question is, what are they doing with all this cash? Let's talk about their capital allocation strategy.
Right. So they're making money, but are they using it wisely?
Well, first things first, Vale is committed to rewarding their shareholders. They've already announced a $2 billion payout in dividends and interest on capital. Plus, they extended their buyback program.
That's good news for investors. But are they sacrificing future growth to fund these payouts?
That's the key question, and the answer is no. Vale is finding a balance between keeping investors happy and investing in the future. Remember, they actually lowered their 2025 CapEx guidance to $5.9 billion.
Right. So they're being more disciplined with their spending, focusing on the projects with the highest potential returns.
Exactly. And that disciplined approach is clear in their commitment to a healthy balance sheet. They're targeting an expanded net debt range of $10 billion to $20 billion, aiming for the sweet spot right in the middle.
So, not a spending spree, but not hoarding cash either. They're finding that middle ground where they can fund operations, reward shareholders, and still have room for strategic investments.
That's the goal. It's a balancing act, but it's essential for long-term success.
Okay, I'm getting a better picture of their financial strategy. It sounds like they're being very deliberate. But let's get specific. What are some of those future growth plans? Where are they putting their money?
Well, we already touched on New Carajás, that big investment in the Carajás region, especially those critical minerals everyone's talking about.
Right. The play for the future of electric vehicles, renewable energy. It's smart to get ahead of the curve.
Definitely. But they're not ignoring their core business either. They're still investing in expanding their high-quality iron ore production. They know demand for those premium products isn't going away anytime soon.
So they're playing both sides, strengthening their position in their core market while also diversifying into these high-growth areas.
Exactly. And they're doing it with an eye towards sustainability. That's part of their long-term vision, too.
Okay, I see how it all fits together. Vale is becoming a leaner, more efficient, and more forward-looking company. But let's zoom out a bit. What about the bigger picture? What challenges are they facing in the global mining landscape?
Good point. It's not all smooth sailing. Even for a company like Vale, the global mining industry is dealing with volatile commodity prices, geopolitical risks, and growing pressure to be more sustainable. It's a tough environment.
Right. Even the giants have to face the storms. So how's Vale navigating these choppy waters? Are they just hoping for the best?
No way. They're being proactive about managing these risks. One thing they've done is diversify their portfolio, both geographically and in terms of the commodities they produce. That means they're not overly reliant on any single market or product.
It's like a diversified investment portfolio. You spread your risk. So if one area takes a hit, others can cushion the blow.
Exactly. And they haven't forgotten about financial discipline either. They're actively managing costs so they can stay profitable even if commodity prices drop.
So it's not growth at any cost. It's about sustainable growth, making sure they can weather the ups and downs.
Precisely. And their commitment to sustainability plays a role here too. By operating responsibly and minimizing their environmental impact, they're reducing the risk of regulatory fines, community backlash, and reputational damage.
It's not just about doing the right thing, it's also smart business.
Exactly. And it's attracting investors who are focused on ESG factors.
Okay, so they're managing costs, diversifying their portfolio, embracing sustainability. It sounds like they're on the right track, but let's be realistic. Are there any red flags? Any areas where they might be vulnerable?
That's a great question. And it's something we'll dig into deeper in the next part of our deep dive. We'll look at some of the potential risks and uncertainties that Vail faces, as well as their efforts to address the past and rebuild trust.
Sounds like we've got a lot more to uncover. Stick around for part 3, where we'll tackle those risks, revisit those legacy issues, and see if Vail's transformation is really as solid as it looks. You won't want to miss it. All right. Welcome back, everyone. We looked at Vail's impressive performance, their strategic moves, and their commitment to a sustainable future. But as with any investment, there are always risks.
Yeah, no company is perfect, and Vail is operating in a global market that can be pretty unpredictable.
So let's talk about those risks. What are some of the headwinds Vail might face?
Well, the big one is commodity prices. Vail's success is tied to the prices of iron ore, copper, nickel, all those commodities they produce, and those prices, they can swing up and down like crazy.
It's like a roller coaster. You got to be prepared for those drops. So how vulnerable is Vail to these price swings?
A big drop in iron ore prices, for example, would really hurt their revenue and profitability. It's a risk investors always have to consider.
So even though they're diversifying, they're still pretty dependent on iron ore.
Yeah. And it's not just the price of iron ore itself. The cost of other things like energy and transportation, those can impact their bottom line too. And those costs are also affected by global trends.
Okay, so commodity prices are a big one. What other risks should investors be thinking about?
Geopolitical instability is another big one. Vail operates in a lot of different countries, and some of those countries face political uncertainty. Regulatory changes, social unrest, any of those things could disrupt their operations, hit their profitability, even jeopardize their ability to operate at all.
Right, it's not just about having a good business plan. You've got to navigate those political and regulatory minefields.
Yeah, it adds a whole other layer of complexity. A sudden change in government policy could really throw a wrench in their plans.
So commodity prices, geopolitical risks, anything else?
Operational challenges. Mining is a risky business. Accidents happen. Equipment fails. Natural disasters.
Yeah, those damn disasters a few years back are a reminder that things can go wrong.
Exactly. And while Vail has improved their safety and environmental practices, there's always a chance of something unexpected happening.
Okay, so we've got commodity prices, geopolitical instability, operational risks. What else?
Competition. The mining industry is a global battleground. Companies are always fighting for market share. And Vail faces competition from other big players as well as smaller, more specialized companies.
So how are they staying ahead of the competition?
Well, their focus on cost management is key. By keeping costs low, they can handle those price fluctuations better and stay competitive even when things get tough. It's like building a financial fortress to protect themselves from those market storms.
Makes sense. And their diversification helps too.
Right.
Not having all their eggs in one basket.
Exactly. And their commitment to sustainability is also important. By operating responsibly, they're reducing the risk of fines, community pushback, and damage to their reputation.
So sustainability is not just the right thing to do. It's a smart business move too.
Absolutely.
Yeah.
And it attracts investors who care about ESG factors.
Okay. So they're managing costs, diversifying their portfolio, embracing sustainability. Anything else they're doing to address these challenges?
Well, one of the most important things is their work to resolve those legacy issues and rebuild trust. Those damn disasters really hurt their reputation. And it's crucial that they show a real commitment to change.
Yeah, it's going to take time and effort to rebuild that trust. So what are they doing?
They've implemented new safety protocols, strengthened their environmental management, and committed to providing reparations for those affected by the disasters. They're also working to resolve legal issues and fulfill their obligations to the communities impacted.
It's a long process, but it sounds like they're taking it seriously.
They are. And it's not just about checking boxes. It's about a cultural shift, putting the well-being of their employees, communities, and the environment first.
That's good to hear, because trust is so important, especially for a company like Vail.
Absolutely. They need to show that they can be responsible stewards of the resources they extract.
It's not just about ethics, it's about their long-term survival.
Right. If they don't operate responsibly and earn back that trust, They're not going to last, no matter how much iron ore they dig up.
So as we wrap up our deep dive into Vale's Q4 2024 earnings call, it's clear they're a company in transition, trying to find that balance between financial success and sustainability.
And while they face challenges, they're also embracing new opportunities, investing in future growth, and adapting to a changing world.
It's a story that's still being written, and we'll be watching to see how it unfolds. Okay, time for the fun part, our This Is Not Financial Advice's segment.
All right, the time where we let loose and throw out a crazy but plausible trade idea based on what we've learned already.
Hit me with it. What wild scenario are we exploring today?
Okay, imagine this Vale is going big on critical minerals, right? They're betting on electric vehicles, renewable energy, the whole thing. But what if they went even further and spun off their entire base metals division into a separate company?
Whoa, spin off the whole thing. That's a big move. But
Yeah.
I'm listening. How would that even work?
Picture this. A new company, call it Vale Future Metals, just focused on copper, nickel, and those critical minerals. This new company would have its own management team, its own stock listing, and the freedom to grow without being tied to Vale's iron ore operations.
Interesting. So investors who are really bullish on electric vehicles and renewable energy could invest directly in Vale Future Metals without having to bet on all of Vale.
Exactly. It would give them targeted exposure to that high-growth sector. And for Vale, it could unlock a lot of value. Think about the potential market cap of a pure-play base metals company backed by Vale's experience and resources.
It's like creating a more focused entity that can attract new investors and potentially be worth more.
Right. And it would let Vale focus on their core iron ore business while still benefiting from the growth of Vale Future Metals through their ownership stake.
So they keep some control, but also unlock value and attract new investors.
Right.
Clever.
Of course, this is all hypothetical. We don't know if Vale is actually thinking about this, but it's fun to explore the possibilities.
Right. Disclaimer. This is not financial advice. Do your own research. Talk to your financial advisor. And don't blame us if this crazy idea doesn't work out.
Exactly. We're just trying to get you thinking.
Touché.
All right, that wraps up our deep dive into Vale's Q4 2024 earnings call. We covered a lot of ground: record production, strategic moves, financial performance, sustainability initiatives.
We looked at the risks and the rewards, the challenges and the opportunities.
As always, do your own research. Think about your own risk tolerance, and don't make investment decisions based solely on what you hear on a podcast.
Thanks for joining us. We'll be back soon with another episode. Until then, stay informed, stay curious, and keep digging deeper.